This is Sarah Larbi. You are listening to Where Should I Invest? And today we are learning about the flipping strategy with Ryan De Laurentis. You might have heard him on a podcast prior. He was also a wholesaler and still is a wholesaler and has done hundreds of wholesale deals. And we had him on the show talking about that. And he's done about 60 flips as well. And so we talk about the flipping strategy, how it can work, where it can work, what to avoid, mistakes, and all that good stuff. So if you have ever wanted to be a flipper, flip properties, make some quick cash, this is an active type of investing strategy. You are going to learn a ton. And there's actually one tip that he provides about how to purchase a property without it showing up as the purchase price in the geo. So there's a way to do it, and he actually provides a free breakdown of all of that good stuff as well that you can contact him for. So you're going to want to know about that tip. I'm going to tell you, I didn't know about it. Basically, you're buying a property, and instead of showing exactly what you paid for, there's a way to legally do it so that it doesn't show it and it shows it as a dollar. So like it's like you purchased a property for a dollar. And why you want to do that is when you're reselling it after a flip, you don't necessarily want to know, or you don't want the buyer that you're going to sell to necessarily know what you bought it for, right? And the profit that you're making and all that stuff. So, really cool tip. So, we do talk about that. Don't forget to leave a rating and a review. And Ryan also has a course that he's created. So, he's going to talk about that at the very end, too. So, enjoy the podcast. And if you need anything, Sarah at sarahlarbi.com. Cheers, guys.
Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real estate investing in Canada with your host, Sarah Larbi.
Ryan, welcome to the show. How are you?
I'm great. How are you doing?
Good, good. We go a way back. I think, we met back in 2016, 2017, potentially, and here we are today. And I think you've been on the show two, three times already, but I wanted to have you back because, you've been doing a ton of stuff since we last had you on the show, and many people may not know who you are. So maybe let's start with a high level overview of, what you do when it comes to real estate.
Yeah, sure. Thanks for having me on. Yeah, I do think I was on maybe in 2018 or 2019. And yeah, I think we might have first connected at Rain or some other event in the GTA when I was living there. But yeah, high level overview for me. So I guess I've been investing in real estate since 2016, 2017, I think is when we kind of bought our first property, started getting educated maybe a year before that. And then my wife and I moved out to London in 2018. Yeah, so we had DCI properties operating in Ontario and Alberta. And then in addition to the wholesaling company, I also started flipping houses. And so far to date, I've flipped about 70 houses, mostly in Southwest Ontario, but we've reached as far as Kingston and other areas east up the GTA, a couple up in Barrie, but most of them have been in Southwest Ontario. Built a little rental portfolio of single family houses. Actually, starting out, we were originally diving more into multifamily, but they were smaller buildings, like 6 to 12 units. And we just found that it was a bit of a headache managing the tenants, and Courtney was doing all the property management. So yeah, we sold those buildings and since kind of have active businesses and then kind of park some of the passive money in buy and hold, just single family house rentals. And that's the majority of the real estate side. I know you and I have chatted before. I've also started getting into other businesses. Now, in addition to just being a property investor, I'm also a business investor. So I'm looking to invest and acquire other businesses. And it's interesting how many similarities there are to real estate and businesses, both in terms of how you acquire them, the motivation from the sellers on, finding good deals to, how they're analyzed and evaluated, et cetera. So obviously a lot of differences, but some similarities, but that's a little bit of like a very high level overview. So started a wholesaling company, I guess originally started in multifamily and then moved into wholesaling, built a wholesaling company, still actively flip and have a small rental portfolio.
A lot of different strategies. It is impressive. I mean, even just the active businesses, flipping is an active business and wholesaling is an active business. And, even just scaling it to that level. Because I think last time we had you on the podcast, that's what you were predominantly focused on was the wholesaling piece. And I think maybe you were doing some flips and you still had your multifamily portfolio. So definitely things have changed a lot. And then you got it, like you said, like you got into the business piece, which I think is important. Has your strategy changed with experience, or has it changed with the economic times and the,
So,
those changes that we've seen politically, economically, or was it mostly just kind of, you know, you're doing?
yeah, it's a good question. I would say both have changed for both reasons. So I think originally when we started, so our original plan for Courtney and I, when we got into real estate, was kind of the same that everyone has, right? Buy a bunch of rentals, have the rentals cover your, monthly expenses, and then you can sort of leave your day to day. I was working in insurance at the time. Courtney had a job in Toronto. Neither of us loved our jobs, but we really did enjoy this, investing in real estate space. But we quickly found out like having 12, 15, 18 units, each paying you $100 a month per unit really doesn't cover a lot. And then if there's one tenant that doesn't pay rent that month, or there's one major issue at a property, that wipes out your entire cash flow for months. So I think for us, we kind of bought into that hype, and that's kind of where we started our investing career. But we realized what we needed was a business that produced more significant chunks of active cash, and that's what kind of got us into wholesaling and flipping, because the passive game of just buying rentals and letting them sit, that works, but it works as a long-term strategy to build wealth. I don't think it's a necessarily great strategy for someone starting out who wants to build active cash and really have a significant change in their lifestyle. So that's where we started. And then, regarding the economic conditions, that's definitely influenced, how we flip or how we acquire properties. I've been very public about this, but in 2022, when the market flipped and interest rates went up, I had bought 6 flips between March and May of 2022, and we're holding those until they all closed in June or July. And over the course of those 6 deals, I lost about 360 grand over those 6, and 2 of them had 6-figure losses. And unfortunately, a couple of them, there was really nothing I could do. The market changed. A couple of those areas they were in lost about 20% in that time that I was holding them. I guess I can say that there's nothing I could have done, but the agent I had at the time was screaming at me to just drop my price and get it sold. And I kept wanting to feel like I guess I could outsmart the market or figure out a way to do something in the property, or maybe just wait a little bit longer for the right buyer to come along. And the
Right.
longer we waited, the more I lost. So I think for me, it was just a reality check that sometimes you just need to check your ego at the door, drop your price, move on to the next one. But that has definitely made me a lot more cautious, I think, on where I buy, how I buy. I've created my own set of rules for flipping, and both myself and my partner that I have on that business really trying to abide by them, because I think, it's one thing to hear a bunch of content when you're getting yourself educated and you're learning and you're going to seminars. It's another thing to actually take the loss yourself and learn from it and have that experience. And it really is kind of a reminder to not do that again. Again, some of those things can't be avoided. The market changed and pretty significantly, and I don't know there was much we could have done to avoid that. But I think at the time we were being very aggressive and felt like we could turn anything into a deal because of how much the market was moving up in our favor.
I mean, yeah, I mean, I started in 2013, you started in 2016. We pretty much just saw all
That's
positive
right.
until then, right? And I think anybody that was in the market in some capacity or another has felt it and has felt some sort of loss. I think, with yours being flips, you realize the loss more quickly maybe than somebody that's kind of holding for the long run. But, it's one of those things I would just say is it's part of the game, unfortunately, right? Like
It is.
most people didn't predict that there would be, I don't know, what was it, 6 or 8 increases very quickly like that. And the market totally changed. And, in hindsight, it really sucked for you, but it also wasn't your first 6 deals, which, like you might have not done 6 at a time when you first started. That was,
That's right.
over time and over experience and building your team and all that stuff. But what,
But I think it's a fair point just to say, even if you have built a team and done a bunch of deals, it doesn't make you immune to
no,
a loss.
no,
And, out of the 70 or so flips I've done, I've lost on about 12 of them. And I've learned a lot from them. And I'm grateful for, the lessons that I've taken away, but the losses hurt regardless if it's your first or your 11th or maybe soon to be 13th for me in the future. But it is part of the game. And if you're doing a high volume, unfortunately, sometimes the losses are part of it. But I am happy to say, I know there's been a lot of drama and just, people who have been lending money and taking hits. And I am happy to say that in all of those losses, all of my lenders got paid back in full, never missed a payment to anyone. I took the loss and the lenders got paid back. And I'm happy to say, I think so far to date, I've borrowed about 20 or 22 million to cover the flips and the projects I've done and never missed a payment to any lender.
Yeah, no, that's important for sure for reputation and everything else. But going back to the losses, I do want to talk a little bit about that. The 12, you said 11 or 12 that you've lost on, what were some common denominators? Was it the speed, the renos? Like maybe just walk us through if you had to summarize it into maybe three main reasons why there were losses, what would they be?
I would say the first one was just taking on projects that were too big. I think as I've kind of gone through each of those deals we've done now, I've noticed that we actually have a higher cash on cash return on projects where we keep the renos to about 30 to 50K. Once they start pushing that 60, 70, 80, closer to 100 range, yeah, sure. Sometimes you can hit a home run, but sometimes not. And the property can just have more issues than what you thought. So I think for me, one of them was just taking on bigger projects. But the bigger project also means a longer hold time. And the hold time is just bleeding profitability. So another thing I realized is if we are going to take on a bigger project, it has to be at a smaller price point, because at that point, the holding costs for us are much less if we're holding a property for 400K than we are for one at 800K. So if we're going to take on a longer project that might extend that timeline, I want to make sure that the holding costs are as reduced as possible. So keeping the price point, I have this funny motto. I don't know if I'm allowed to swear on here, but cheap shit sells. And for me, what I look at is, where is my biggest pool of buyers? And your biggest pool of buyers is always going to be at your lowest price point. So what I realize is instead of putting 100 grand into property and potentially pricing out a lot of the buyers who could otherwise afford to pay that and who aren't necessarily paying that extra money out of pocket, the bank is likely giving them 95 to 80%, depending on their LTV they're getting to buy that property. The more I put into it, the more I'm pricing those people out. So I want to get it just to a state where it looks good, it's showable, there's good photos, but I don't need to do everything all the time. I just need to get it mortgageable and to a place where someone feels like they can move in and they want to live in that house. And then I keep my buyer pool as big as possible. So I think keeping, lighter on the renos, if they are going to be bigger projects, trying to keep the purchase price lower. And the third thing on losses, honestly, sometimes they're unavoidable. But I think the biggest, takeaway for me is drop your price and move on. Because there is a cost and opportunity cost of holding onto a property too long and trying to force your way out. You're going to have a lot of money and a lot of time and effort stuck in that deal. And the longer you wait to try and get something out of it, A, the less you might get back, because again, you have those additional holding costs, but B, you just might be missing out on the opportunity cost of the next deal.
Yeah. I mean, it is very interesting. So would you say that you're looking at the bottom third of the market as a purchase price as an example, and then your renos, maybe just walk us through, is it a single family property that you're looking for, and then you're not converting, you're just kind of doing the kitchen, bathroom, paint, whatever, issues that have to be fixed along the way, and getting in and getting out, walk us through a typical buy box option.
Yeah, sure. So it is area dependent, but what I do try and look at is the average price point that's selling in that particular city. So I've bought and sold in maybe a dozen, maybe even 15 cities. And for each one that I've bought and sold in, I'm always trying to look at what is the average or the median price point for that city. So let's say it's Brantford and the average price point is $650. I don't want to go into a flip already paying $650. I want to go in buying something to where I'm taking the ARV closer to that median price point. Because at that median price point, again, I know I'm going to have my biggest pool of buyers because that's where the majority of the houses are trading. Ideally lower than the median, but if I'm going to be on the high end, it's just at it or just over. I don't want to go into Brantford and flip a house that's going to resell at 800 or 900 because the buyer pool is going to be a lot smaller. So that's probably one. And then in terms of a typical deal, So let's say the average purchase price is around, 400K and I'm exiting at 550. We're usually putting in 35 to 40K in renos. And yeah, just like you said, kitchens, bathrooms, floors, paint. What I do emphasize to people though, and sometimes this can go overlooked, and I've come across a couple people are, checked out their projects. They will spend a lot of money inside and a lot of money on the kitchens, but they neglect the curb appeal from the outside. So I'm a huge proponent of spending a little bit more time, effort, and money outside the property, because that first photo, you need to form a good impression from the person that's going to be buying it. Otherwise, they're never going to get inside to actually see the kitchen that you spent 25 grand on. So, and you have to know that some of these buyers are going to be making these decisions with their parents or a spouse or a relative or somebody. So it's important for them to feel like there's this wanting to show off the property. And what are you showing off? The first thing you send someone when you send them the listing is that first photo.
Is the
That
curb
has
appeal.
yeah. And if that doesn't feel good, the person looking at it isn't going to have, you're going to be looking for everything else in the property to suggest maybe why this isn't a good buy for them. Or maybe you just need to have the best kitchen in the world to kind of make up for, the front kind of looking a little frumpy.
Yeah. So give some examples
Yeah.
of like what you would do in the front. Like, would you paint the siding? Would you add a little like porch? Like, walk us through some examples of what you've done that have really helped and enhanced the curb appeal.
Sure. I'll just use the most recent ones. We had a property in London that we bought that had a ramp put on it because I think the person that was living there was in a wheelchair. So we took that off, and then the house still had an awning on it. And we had finished most of the renos inside, and I was standing outside with my partner. I'm like, this just still doesn't, like, I'm looking around at all the neighboring properties, and a lot of them that looked like they had been updated had the awnings removed, and they had put on a nice deck or like a little, front porch wooden deck. And as I'm looking around the neighborhood, I'm like, okay, that I think would really shift, because the awning was like a weird colored green that was matching some of the window shutters as well. So I said, let's remove that. Let's paint the shutters. Let's add this deck. Yes, it's going to cost us an extra 3-4 grand, but I really think it's going to lift the curb appeal. And whether it was the deck or not, we ended up getting about 15K more on our list price than we thought we would. And I do think that front photo of the property really popped and really made it inviting. Now, it was a smaller home too. So I'm a big proponent of, if the home is smaller, you really want to try and emphasize the outdoor space as much as you can. If there is room to put on, a deck on the back, or to upgrade the deck on the back, it just adds the feeling of having this additional living space that you want to be able to utilize. So yeah, for us on that home, sure, we could have left the front porch as it was. We could have left the awning and probably saved ourselves, 4 or 5K. But I think that money was really put to good use in how that first image of the property showed once we got it listed.
Yeah, absolutely. Thanks for going through that. Now, your renos, you're saying you're doing like small renos, right? You're purchasing in the bottom third of the market price as an example, and your renos are 30, 40. Can you break down like what that usually is? Maybe just like, is it an IKEA kitchen that you're kind of like, piecing together? Are you hiring your own internal folks to do the renos to keep the price of the renovations fairly low? Like, walk us through that strategy if you don't mind sharing.
Yeah, no problem. So I think I'm going to start with just kind of some basic numbers on the deal, and then I'll shift to the project management side. So for me, a big proponent of my model is base hits. You're going to come across a home run deal every now and again, but if you're only ever looking for home run deals, you're going to miss out on a ton of base hits. So a base hit for me is anywhere between 35 and 40K as a minimum, that we're targeting in terms of net profit, once everything is paid and everything's closed out of the bank account. And what do we have left? So that's our target.
And how many months usually? Like, what do you estimate for that?
Usually about 3 months. So
Okay.
and that's from the time we actually take possession of the property to the disposition and the person buying it who ends up closing. So we're in and out at about 3 months, sometimes 4, but generally speaking, it's about 3 months. And with that, that's why we're really trying to aim to keep those renos around, 30 to 40K, because it allows us to get in and out in about 5 weeks on the reno, have a week for cleaning, staging, getting the photos done, then having it listed. Usually, again, in this market, it might take about 2 to 3 weeks to get an offer, and then, about 30 days for that buyer to end up closing on it. So that's kind of a rough idea in terms of the numbers. Now, for the project management, a lot of people don't know this, but I'm not very handy. I've never fixed a single thing in my entire life. I have a wholesaling business and a flipping business. So For me, I'm a big proponent of knowing where you're strong and trying to partner or hire out where you're weak. So
Mm.
originally, I took on a lot of these projects myself and we would project manage them. And I think that's also where things got away in terms of some of the renos. I've since now partnered with someone in my flipping business who actually manages the project. We split everything 50-50, and their involvement in the deal is managing the reno and managing the contractors, sourcing that out and staying on top of them. And
Is it mostly coordinating trades or contractors? Because there is difference in a bit away, right? Like one's cheaper than the others, I guess.
yeah, there is. I mean, I guess I would say it kind of depends on the project. The bigger the scope, the more likely you're going to have, an actual contractor or
Right.
GC. The smaller the scope, you can usually get away with having trades. We've kind of found a sweet spot in the middle where we'll find companies, contracting companies who have, 3 employees. It's usually
So their
3 guys on
overhead is
site.
fairly low.
Their overhead is fairly low. They're not going to be the cheapest. They're not going to be the most expensive, but they can be quick. And for us, speed counts. So yeah, that's kind of where we found our sweet spot. We've gone the route of dealing with individual trades in the past, and sometimes it can just be difficult to, manage those timelines to really try and make sure you're coming in within that 4 to 5 week mark. But we
Mm.
find those smaller teams work well. You're usually dealing with one person who owns the company and they're kind of managing their staff underneath.
Okay. No, that's good. And that is a pretty quick turnaround too, to have everything, in and out in 3 months. What about, permits? Like, are you pulling anything before closing? Or are you working with the city? Or are you kind of trying to keep everything, fairly cosmetic, not to have to worry about that?
Yeah, we try not to get into permits as much as we can. I mean, again, if it's unavoidable, then we'll do it as soon as we possibly can. And yeah, if we can get in prior to closing to measure or have someone in to take a look and start submitting that early, we will. But generally speaking, that's why, again, we're trying to keep the renos on the lighter side so we don't have to
Hmm.
get into too much on the permitting. But working on one in Scarborough now, where unfortunately the neighbor called the city on us and
Oh
we have
God.
to get permits. But, that stuff happens. But yeah, generally speaking, we try and keep it to where we don't need them. But if we do, we will. And we want to try and get on that as soon as possible. And it's also city dependent. Some take longer than others.
When you're purchasing this, are you going to the same types of stores? Or like, are you going to like a Home Depot? Or are you buying in bulk? Because you're doing multiple at the same time, but where are you finding, the best opportunities to get materials?
Yeah, it's a fair question and probably one better suited for Matt, my partner. But no, I think like we have a standard floor that we use. We have kind of some standard light fixtures that we like to use in most of our properties. So, if there's a good deal on them, then we'll try and buy them in bulk and,
Mm.
let's have some extra storage. We can store that. But the one thing I will say is I have been able to finagle sort of really good discounts buying from wholesalers as opposed to buying through Home
Mm.
Depot. And so even on the flooring, I get prices from the wholesaler who will supply Rona or Home Depot or the individual flooring stores in those cities as opposed to buying them retail. So that's been a little, cost saver for us as well as just trying to go as direct to the manufacturer as we possibly can rather than buying retail a little bit more downstream.
Yeah, for sure. It's, what lighting you mentioned, I actually found some really good deals on Amazon.
Yeah.
So I remember doing it for one of my cottages I bought, but lighting at Amazon was nice. So I ended up doing that a few times. So let's go through. So you're the coordinator of a lot of this stuff, right? You're purchasing, you're
Mhm.
analyzing, you're working with the team, you're organizing it for the sale. Somebody that's starting out and wants to scale to 60 plus, like what are some insights that you can provide or some key tips that you're like, in order to be successful, this is the kind of stuff that you want to be thinking about?
I mean, I think the number one skill you can have if you're going to want to do any kind of real estate investing is analyzing deals. You really got to get good at figuring out an ARV, figuring out an as is value of property, getting comfortable knowing, roughly what renovations will cost, and having a really good tool that you can use to be able to run numbers. If I could go back in time and I was starting out again, a lot of the content I went to was great, but I would have spent so much more time analyzing deals. And thankfully, now that, we're 600 deals later on the wholesale side, and those are deals completed, right? We
Mm.
probably averaged like, for every property we analyze or make an offer on, we're probably like 5 to 1 or 7 to 1. So just in that business, I've probably analyzed, thousands and thousands of deals. And then on the flipping business, it's probably the same, if not more. So I would say that for sure is probably, and I'm still not even great at it. I think I got a decent handle on it, but I think that is in my opinion, if you're going to do any type of real estate investing, really getting good at analyzing deals and analyzing numbers. And even if it's not something you are going to buy yourself, analyze it as if you were going to. It's going to make you a better investor in the long run if you truly know how to run your numbers on a property. Because if you can, and you get good at it and you get fast at it, the person who responds to the deal first is usually the one who's going to get it. So if you get good at running numbers and you're confident with that, it allows you the speed to be able to pick up that next deal that comes along.
How many offers do you think you put out for the one deal that you actually get accepted?
Yeah, that's a good question. I would say so in the flipping business. So we'll buy on market. We buy from other wholesalers. We get the odd deal that comes through our own stream, but probably for every 5, we might get 1.
I think sometimes that's the longest part and people don't realize it. When you really start looking and you're looking for those deals because they have to be purchased, right? And the ARV has to make sense for the renos that you're going to put in. It takes longer than a lot of people think, even in a market like this. Definitely back in 2020, 2021, like that was a lot tougher. But even today, I think the sellers are still not fully at terms with the new price of today's reality and the new ARVs that we're getting. And so, there's that challenge, but any insights on tips that people can do to try to, have a better odds at getting accepted offers?
I think relationships go a long way. So, if you're going to buy on market and you're going to use an agent to do that, really try and form a relationship with that agent to let them know what it is you're looking for, let them know you're serious, that you're ready to buy. And I do the same thing if you're reaching out to other wholesaling companies that are offering properties off market. The more that someone can remember, this is what you do. We all have short attention spans, right? So the more that I can remember that, John or Katie are looking for this type of property in this area, when it comes up, they're going to be the first person I think of. So I think to get an offer accepted, really try and stay in contact with the person or the company that you're looking to buy a property from and, see if maybe you can offer to take them to lunch or for coffee or just have a virtual Zoom to let them know what you're doing. I think, as a wholesaler company myself, we have thousands of buyers reaching out to us all the time who are like, yeah, I want a deal. But there's only a handful that have actually taken the time to get to know people on my team, that have taken the time to get to know me. And when we have a property come up and maybe we don't have the same ability to assign it, and so we need to move it quickly, those are the first few people that I'm going to think of because they're most top of mind.
Yeah, no, that makes sense for sure. And that's the acquisition page. And I think last time you were on this podcast, you had a lot of people reach out because you were offering that analyzer tool, right?
Yeah, that's right. Yeah, the flip tracker.
Yeah, but it is important to understand the numbers because it is truly going to be all based on that. I think the mistakes that I see people make is they buy and they're not really getting the deal, and then they renovate and then they over renovate and then they go over time and then they're expecting top dollar as well. So just the numbers are so important. The other thing I would just say, and you might be a little bit different in your case, but do you recommend that people have a backup plan, such as like renting it if it doesn't sell for the price, or, furnishing it, going midterm as an example, like that could help? Like, what are your thoughts on having a backup plan should a flip not sell?
So it's a fair question. I mean, I don't know. I guess it's always good to have a backup plan, but I've never gone into a flip with a backup plan of let's turn this into a rental, because how I finance it, the money I've put into it, right? So one of the things I want to talk about, because you talked about running your numbers, and then I'll get back to the second part of this. I've built a flip tracker over the years that I think, everyone that I've shared it with from an investment as a real estate investor continues to use it to this day and often tells me it's one of the best tools they've come across. But I think the reason for that is when I talk to people about their numbers on flips and I hear what they bought it for, how much they put into it, and when they sold it for, the difference between those is not what they're putting in their pocket, right? There are so many additional costs, from the purchase cost to the sale cost to holding costs to even their cost of money. So one of the things that's been able to help me shave a little bit off of each deal is I have been able to source all of my private money. So I don't use a mortgage broker. I've now developed really good relationships with my lenders. It's funny, I actually have an email sitting in my inbox from one of them who says, hey, Ryan, I just opened up a new line of credit. when's your next deal coming? Now, I personally guarantee every deal I do. And I often will say to my lenders, if I'm meeting them for the first time, or it's our first deal that we've done, I really like my house. I don't want to give it to you, but this is me showing that I'm invested in this deal by giving you this personal guarantee. And so for me, I've been able to save quite a bit of money raising my own funds privately and not having those additional fees on each deal. So just going back to the numbers, I think there's a lot more that goes into each transaction that I think often gets missed unless you have a tool that can really lay out all of the very sort of minor costs that do add up over time. So yeah, I think that's just a good one to kind of keep in mind for people that are getting into it. Is there are a lot more costs when you hear someone say, I bought it for, $4, I put in one and I sold it for $3. Their difference isn't one. There's a lot of other costs that go into it.
One of the things that I learned recently from you was how to legally hide the purchase price now that you're talking about buying.
Yeah.
I think that's really cool. Can you, without saying exactly all the details, because I think this is going to be one of the giveaways we're gonna give out to the listeners today, but can you just explain what that exactly means and why it might be worth doing?
Yeah. So this is a super interesting trick that I really don't think many people know about, but if you're going to consider flipping, I do think it's a good one to know. So when you buy a property in Ontario, there is a registration number that gets attached to that transaction from the ministry's office that then gets sent to your lawyer to complete the transaction. Normally that happens on the closing date when you pay your land transfer tax, because you pay your money to your lawyer. The lawyer takes that land transfer tax, pays it to the ministry office. They issue this registration number, and then your consideration value, the price you paid for the property, gets registered at that time. You can pay your land transfer tax in advance. There's an office in Oshawa that you can do that through, and I have some instructions included on how you do that and how to instruct your lawyer to do this. But effectively, when you pay your land transfer tax to this office in Oshawa, at the time that they receive those funds, there's no consideration value for the property. The property hasn't closed yet. So the only thing they can do is accept your funds and put a $1 placeholder for the consideration value, and then send that receipt along with that registration number back to your lawyer. And that's what they use to close. So when you go to pull a geo on that property, after you've closed on it, it's going to show that there was a transfer of $1. Why would anyone want to do that? If you've bought the property for, a really good price, what I've found in my experience when I've bought good deals and then sold them maybe 6 weeks, 8 weeks later, the agent typically who's looking up that property with their client is going to be able to see that I bought it for $350 and now I'm listing it for $550. Let's just offer him $5 and see if he takes it, when the property might actually really be worth $550. When they see $1 as the transfer amount, that's usually either an interfamily transfer or a company transfer. And most agents just take that at face value and say, okay, this was clearly passed between family or from one corp to another. Let's just offer them whatever it's worth.
I love that. If somebody wants more info, how do they contact you for that?
Yeah. So as part of a course that I've recently developed to help people learn how to flip, I do have step-by-step instructions of how to do this, because you do need to get your lawyer on board for doing that. I've laid that out. If they want to email me, ryan@dciproperties.ca, I'm happy to send them that if they're a listener of the show, and they can find out more info about how to legally conceal their purchase price.
Perfect. Yeah, just mention where should I invest, and Ryan will send that over to you. Let's talk about your course, because I think it is pretty cool. I started reviewing it briefly. You sent it over prior to this podcast so that we can, have a quick overview discussion about it. Why did you decide to create a flipping course?
Good question. I've consumed a lot of content over the years, some paid, some free. And I'm a big proponent of investing in yourself. And some of the content I've consumed was great, and some of it not so much. And what I've found in most of my, real estate education journey is that a lot of people will talk about real estate as a whole, but I didn't find that I came across content that was so granular on one particular strategy that really went deep and gave you a lot of tools and templates that you could action right away. So Partly for me, it was just a way of giving back to the real estate community. I mean, everything I've learned has been a result of things I've learned elsewhere and then actually tried on my own and developed. So yeah, I developed this course last year and I'm just about ready to release it now. One of the other things that I realized kind of going through a lot of content is I think there's this perception that the more I give somebody, the more hours of content I give them, the more valuable it is. I tried to go a different approach. I didn't want to give someone a to do with this course. So I tried to condense it into 7 pillars or 7 sections, with each section being about an hour of content. So, if you were to divide that up amongst 7 days or 1 day a week for 7 weeks, I think it gives someone a much more tangible goal or target to complete a course in a reasonable amount of time. And everything I included in there is really built so that it can be actioned right away.
Amazing. Is this course for Ontario investors only, or is it Canada wide, or is it North America wide? Like, where can somebody apply the information?
Yeah. So, I mean, I flipped houses in Alberta, Ontario. I actually did a couple projects in the US as well. And I would say that most of what I've done can be applied anywhere. I would say there are some nuances like this, how to legally conceal your purchase price. That's more based for people in Ontario. But I have actually had someone come through the program being from BC. And I think, Ontario and BC, outside of a few laws here and there, are fairly similar. And most, I would say, provinces in Ontario or in Canada are similar. There are some nuances. But if you're looking at flipping, the general practices are going to be relatively the same.
Mm-hmm. Yeah, absolutely. Now, this course, I think you're adding live sessions as well along the way.
Yeah, so we're going to have a live monthly call where people can hop on and we can talk about a specific section of the content. Or if you just have a deal that you're looking at and want a second set eyes in analyzing it, that's really what that sort of, monthly call is going to be for. And then the content itself is set up as a kind of learn at your own pace with pre-recorded videos. And the content is divided into 7 pillars. So I'll just quickly touch. So the first one is on where people can find deals and actually getting properties to analyze. The second section is on how to analyze, where I give you my flip tracker and the steps of how to actually analyze a deal, come up with ARV, et cetera. Then we get into acquisitions, which to your question earlier, Sarah, like how do I actually go about acquiring the property and getting my offer accepted? Then we go into project management. So how to pick your contractors. I also give some vetted lists of ones that I've worked with for people. Then we get into financing and how to actually finance the deal, how to raise money, and how to position yourself in the deal so that you're not asking for money, you're presenting an opportunity. The disposition of the property, which I honestly think this is one of the ones that gets most overlooked. You put all this time and effort into acquiring the property and renovating it, and you don't spend any time thinking about, here's one thing I'm just going to say. Please, for the love of God, if you are selling a property you're flip, do not list it on a Thursday or Friday. No one is going to show up. It's not enough time for A, your agent to see it, and then B, the people who are likely going to come, who you want to be your end buyer, to plan accordingly so that they can actually come out and see it on your, Saturday open house. So if you are going to list a property, try and do it either on a Monday afternoon or Tuesday morning is the best possible time for putting up a new listing and then having the most amount of traffic come on a Friday, Saturday, Sunday. So just a small tip on the disposition. And then the last one is on accounting, financing, bookkeeping, and just how to set this up. So if you are planning on doing multiple projects, I often advise doing it in a court, and just some other nuances of how to actually properly sort of bookkeep and account for each property if you're planning on doing multiple deals at a time.
And I think that's really important because a lot can be lost in taxes.
Huge, massive implications. And, I think so. The reason I like business mainly because active business income in Canada on your first 500K of net profit is only taxed at 12.2%.
In a corporation.
In a corporation, that's right. So if you have an active business producing active income, your first $500,000 of net profit is only taxed at 12.2%.
Which is much better than your marginal tax rate of probably 53% at that point in time if it's not in a corp. And again, we're not accountants, but this is
not accountants, not giving
this is just
advice,
high level
account accordingly, but I'm sure that they will probably agree. If you're planning on doing, even 2 or 3 flips a year, you're usually going to save a lot more doing it under a corp. assuming you don't need all that money and you're planning on reinvesting the profits back into other investments.
Yeah, absolutely. So it sounds like it's, like A to Z, start to finish. It sounds like it's also, whether it's 2026, 2030, 3 years ago, that it's still very applicable.
Yeah, and I plan on updating the content as well as things go. If there are any sort of major changes that come across, I have a lot of people asking me about the, anti-flipping laws. And again,
Mm.
because I'm flipping in a corp, this don't really apply. So, but if there is anything major, I will go back and kind of add. And the other thing too is everything that's included in there has been from my own personal experience. Again, I've consumed, and I'm sure you have too, Sarah, content from the gurus who haven't
Mhm.
actually done a lot of deals. I'm very open and transparent. I even in the first video share a list of all the properties I've bought. And so if anyone wants to look them up and, see if I'm full of it, they can check out any of those properties and see
And
if
many
they've
of
been
them
on
will be
title.
listed at $1 purchase.
That's right. And three of them will be at $1. That's right. That's right.
Okay, that's cool. And I think you're doing a guarantee on this as well, right?
Yeah. So the cost of the course is $2,500 and there's 100% money back guarantee, which again is something that I never got as a consumer of content in the past. But if for whatever reason you buy this and you're like, this just had no value and I got nothing from it, let me know and I'll just send you your money back. So yeah, there's 100% money back guarantee.
I mean, you think about it, right? Like you could easily lose that money just buying the wrong property and not analyzing correctly, or, not listing on in the proper way. So I think, do one or two flips and you're it'll be money well spent for sure. Ryan, where can my listeners reach out, find out more, connect with you for the course information? Like, what's the best way to do that?
Yeah, sure. So the landing page for the course is flipsavvy.ca. So flip and then SAVVY.ca. And from there's either a link if you want to set up a call with me, or if you want to just go and purchase the course directly and you'll have access to it in your inbox in a few minutes. Otherwise, if people just want to email me to get in touch, they can. It's ryan@dciproperties.ca.
And for that free how to get your $1 purchase price listed,
Yes.
to
Yeah.
also reach out for that as well. Because I mean, I think every time you come, you provide a ton of value. And I know many had emailed you for the flip analyzer last time and you got a ton of emails and you sent them the flip analyzer. So thank you for, helping the community, ensuring that we have the tools. And I think, in certain markets, this could be a great strategy that could be either applied on its own, but you could also combine it with other things, right? And so whether you're doing
I will just
multifamily.
say, be firm with your lawyer, because a couple of people that I've given this tip to of legally concealing your purchase price said, my lawyer's never come across this before. So my lawyer in London has done tens of thousands of transactions. I think he said he's had someone request this particular thing 4 times, and I've done it 3 with him. So at least in London. So,
It's not common, yeah.
it's not
Well, I
common.
didn't
That's
even know
why,
about it until you
right.
mentioned it. I'm like, oh, this is interesting. I like it. So,
So in the instructions, I kind of lay out what you will need to talk to either your lawyer or your law clerk about, because this might be new for them as well, and a contact number of who they can reach out to at this office so they
perfect.
know what they need to do on their end if they haven't done it before.
Yeah, amazing. Thank you so much, Ryan. I really appreciate your time. We'll have to have you come back for sure. I mean, you're buying businesses, analyzing business. You've got a whole flipping business. You've got courses. You've got the DCI properties, a whole, the 600, what do you say, 600 plus properties since you started wholesaling. That's amazing. The multifamily. I mean, there's so many different directions. Even just talking from a business standpoint, I think could be a great additional episode. But it's nice to see, all your success throughout the years, and you and Courtney make a great team, and, congrats. It's awesome to have you on.
Yeah, thanks. No, I appreciate you having me. And, for anyone out there that's just kind of getting started or getting into it, I think, the best place you can start with is really just great podcasts like this that are giving you content and just staying with it. Yes, there's been some successes, but the last couple of years have not been great for
Mhm.
me. We've seen a massive decline on our primary business, our rental holdings, the value there has gone down, and just overall deal volume has taken a hit. So, but I think there is a lot of strength in just, staying with it, staying in it, and just continuing to hone your skills. And again, if you are starting out, the number one skill I can say is just analyze as many deals as you can.
Amazing. Thank you so much, Ryan.
Thanks, Sarah.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?